Welcome back to the deep dive. Today, our mission is really specific. A detailed analysis just for you, the individual investor, trying to make sense of Turkish financial reports. We are diving into the 9-month 2025 Financials and Activity Report for Gözde Sermayesi Yatırım, or Taklu Aş. You'll know them on the Borsa Istanbul as GOZDE.
Exactly. And it's important to remember what we're looking at here. It's a GSYO, a venture capital investment trust. So their whole game plan, as they state it, is investing in these structured non-food companies that need resources but have high return potential. And they really leverage the expertise, the network of Yıldız Holding. That's key.
Right, so it's less about, selling products day to day and more about managing a portfolio, looking for value growth and strategic exits. Makes reading that income statement a bit different.
Completely different.
Okay, before we really get into the weeds, just a quick reminder. If you find these deep dives helpful for turning dense reports into something you can actually use, please do like, subscribe, and share this with others. Okay, let's start with the foundations. Who exactly is Gözde?
Okay, so Gözde Sermayesi Yatırım Ortaklığı, ticker GOZDE. Established back in 2010, based in Istanbul, their capital structure looks solid. Paid-in capital is 385 million Turkish lira, but they have a registered capital ceiling of 2 billion TL, so room to grow there.
And what really jumps out, I think, is how incredibly lean they operate. You've got this huge portfolio, billions of lira in assets, technically, run from one single office in Üsküdar, Istanbul. And get this. Only 11 employees as of the end of September 2025. No branches.
Yeah, that's the GSYO model for you. They're not meant to be operators themselves. They allocate capital, they strategize. They clearly rely heavily on their related companies, their ecosystem, rather than building big internal teams.
And you see that reliance mirrored in the ownership structure, don't you? It's very concentrated.
Extremely. Kukler Yatırım Holding has the biggest slice at about 29.7%. Then Yıldız Holding itself with nearly 23%. Add in 3 related consulting firms, these danışmanlık agent entities, and you're looking at roughly 2/3 controlled by related parties.
Which leaves the public float, the shares you and I could potentially trade, at around 30.4%. Up just a tiny bit from the end of 2024. Now, what about the people running the show, the board?
Well, you have prominent names like Murat Ülker as chairman. Mehmet Tutuncu, Yahya Ülker are also on board. What's also quite noteworthy is their board diversity. They explicitly mention it. Out of 9 members, 3 are independent women.
Oh, interesting. Who are they?
Fatma Füsun Akal Bosak and Aytas Sanye Mutlugler are named, plus one other. So that's a 33.3% female ratio on the board.
That's certainly keeping pace with modern governance expectations. And what about the cost of running this lean machine, executive pay?
The report states the total benefit paid to senior management for these 9 months was just over 1.3 million TL. So 1,321,932 TL to be exact.
Okay, manageable. Right. Now let's get to the really interesting bit. What's actually in the Gözde portfolio? What do they own?
It's quite a mix. Very diverse across sectors. You've got finance exposure through stakes in Turkey Finance, Katılım Bankası, TFKB, and Kuveyt Türk.
Big names.
Definitely. Then there's major retail players, Şuk Marketler, a huge discount chain, and FLO Masakuluk, the shoe retailer. They also have industrial holdings like Makina Takım and very significant near-total ownership in others.
Like which ones?
Well, they own 99% of Polinas, which is a big packaging company, and 97.61% of Aizmusabat Çalık Sanayi.
Aizmusabat, that's the Durarbi razor blade company, right?
That's the one, a very well-known brand in Turkey.
But it's not just traditional industries, is it? You mentioned a strategic pivot.
Yes, and this is crucial for understanding their future direction, I think. They're making a significant push into technology. They fully own Gözde Tech Ventures, their dedicated tech investment arm, and maybe more importantly, they're spreading capital internationally into foreign venture capital funds.
So diversifying beyond Turkey.
Exactly. We're talking investments in funds like Oyster Bay, ESSPE, Food Labs, 212 Regional Fund 3, Giant Ventures, Revo Capital, Picus II. These are based across Europe, Germany, UK, and even Jersey. They're targeting food tech, deep tech, early growth stages. It's a very deliberate global diversification strategy.
Interesting. So they're trying to balance those large, perhaps more volatile Turkish holdings with potentially scalable global tech bets.
Precisely. It seems like a move to mitigate some local market risk.
Okay, that paints a really clear picture of the company structure and its assets. Let's dive into the financials now. The 9 months of 2025 versus the same period in 2024. But first, You flagged something critical about the accounting.
Yes, we absolutely have to mention this up front. All the figures we're about to discuss, revenue, profit, assets, everything, are presented based on the purchasing power of the Turkish lira as of September 30, 2025. This is TMS 29, inflation accounting. It's mandatory in Turkey's high inflation environment.
And just quickly, why is that so vital for you, the listener, to grasp?
Because if you just compare the raw numbers from 2024 to 2025 without this adjustment, you get a completely misleading picture. Inflation accounting restates the 2024 figures into 2025 lira values, so you're comparing like in terms of real purchasing power. It lets you see the actual performance change, not just inflation effects.
Got it. Essential context. So with that in mind, let's hit the top line, revenue, or hussalat. The number reported is, well, it's startling. It dropped from about 2.83 billion TL in 9M 2024 down to less than 500,000 TL, just 444,558 TL in 9M 2025. That looks like an absolute catastrophe on paper. Should investors panic?
Panic? No. Understand, absolutely. The reason for that massive draw is entirely down to a one-off event in 2024. That 2.83 billion figure included a huge gain from selling participation shares. 2.5 billion TL came from selling their stake in the Istanbul portfolio Yıldız Serbest Erzelfon. That was a major asset exit.
So 2024 had a massive injection from selling something off. And 2025's tiny revenue, where did that come from?
Almost entirely a dividend payment. Specifically, 444,558 TL received from their stake in Kuveyt Turk. So what the 2025 revenue really tells us is that Gözde didn't have any major asset sales during these 9 months, unlike the previous year.
Okay, that makes sense. No big exits, so minimal revenue in their specific GSYO context. But here's the interesting part. Despite that revenue vanishing, their losses actually shrank significantly. Operating loss went from a 5.84 billion TL loss in 9M 2024 to a 2.37 billion TL loss in 9M 2025. And the net period loss improved dramatically too, from a 5.36 billion loss down to a 2.25 billion loss. What's driving that improvement on the bottom line?
Right. This is the second really important financial point. It's about stabilizing the impact of portfolio valuation changes. The main reason the loss narrowed so much is because the loss they had to recognize from the fair value decrease of their financial investments was much smaller in 2025 compared to 2024.
So in plain English, the paper losses on their big investments like Şuk or Penta weren't as severe this period. The value didn't drop as drastically.
Exactly. The market didn't hit the value of their holdings quite as hard in these 9 months compared to the same period in 2024. You can see this directly in the accounts. There's a line called Other Expenses from Main Activities. That's where these fair value adjustments often sit. It fell from a huge 5.9 billion TL loss down to 2.3 billion TL.
So that flows right down to the bottom line and the loss per share.
Precisely. The loss per share improved from 13.93 TL to 5.84 TL. Still a loss, yes, but a much, much smaller one for shareholders to absorb.
Okay, less volatility impact. Now, this brings us to what I found perhaps the most compelling part of this report, the balance sheet transformation, particularly around debt.
Yes, this is a major positive development, I'd say. While total assets and equity dipped slightly, which is understandable given the recognized losses, the total liabilities just plummeted. They went from around 4.5 billion TL at the end of 2024 down to just over 1 billion TL by September 2025.
Wow, that's a massive reduction. Where did they pay off over 3 billion lira in debt from?
Primarily, it was the long-term debt owed to related parties, specifically the amount owed to Yıldız Holding AK. That figure dropped from almost 4.5 billion TL down to about 923 million TL.
So they basically paid off around 3.5 billion TL owed to their main shareholder.
Correct. It signals a huge deleveraging and a significant reduction in financial dependency on Yıldız Holding.
That's a game changer for stability. But how do they manage that without the big asset sale revenue we saw in 2024?
Yeah.
The cash has to come from somewhere. Cash flow statement time.
You got it. And the cash flow statement tells the story clearly. Net cash generated from operating activities saw this massive positive swing. They generated 3.65 billion TL in cash from operations in 9M 2025 compared to only 733 million generated in 9M 2024.
Okay, but operations for them isn't selling widgets. Where did that 3.65 billion in cash actually come from?
It came predominantly from changes in working capital, specifically a huge 3.4 billion TL decrease in other receivables from related parties.
So they collected money that was owed to them by other companies in the Yıldız ecosystem.
Exactly. Money that was sitting on their balance sheet as an asset, a receivable, they called that cash-in.
And then they used that collected cash to pay down the debt they owed to Yıldız Holding, It's like an internal rebalancing act within the group.
Precisely. It cleans up Gözde's balance sheet significantly, makes it look much more independent and financially sound on paper, less reliant on shareholder loans.
That is arguably the most significant positive financial move in this entire report for an outside investor looking at long-term health.
I would tend to agree it's a major de-risking event.
Okay, let's shift gears to part 3. Looking ahead, strategic moves, risks. We mentioned Azmuzabat, the Derby razor blade company, earlier. What's the latest there?
Well, the report confirms what's been speculated. Gözde holds almost 98% of Azmuzabat, and they state they were actively evaluating a potential sale or bringing in a partner.
So that sounds like it could be the next big exit candidate, a source of future liquidity.
It certainly signals that very strongly. An exit there could bring in substantial cash for Gözde to redeploy.
Okay, potential upside. But back to those fair value losses that impacted the income statement, even though they were smaller this year. Which investments were the main culprits for the negative adjustments in 9M 2025?
The footnotes, specifically Dipnot 20, give us the detail. The biggest hits came from their publicly traded shares. Schuckmarketler's fair value was marked down by about 2.14 billion TL during the period. And Pentatechnology, another tech-related holding, saw decreases too, about 370 million TL for their non-listed shares and another 70 million for the listed portion.
So it really underscores how much Gözde's reported profit is tied to the stock market performance of these big holdings, doesn't it?
Absolutely. It's inherent in the GSYO model when you hold large listed stakes. High volatility potential.
Now, despite these market fluctuations and the big debt paydown, Gözde still has to follow strict GSYO regulations. Are they still playing by the rules?
Yes, they are comfortably compliant. The report shows their Girişim Sermaye Yatırımları, their venture capital type investments, make up 97.48% of their total assets.
Wow, that's high. What's the minimum required?
The minimum is 51%, so they are way, way above the threshold. In anything, they might need more non-VC assets if they sell Azmuzabat. And on the debt side, thanks to that massive paydown, their long-term financial debt-to-equity ratio is now excellent. It fell from nearly 15% down to just 3.27%.
And the limit there is?
The regulatory limit is 200%, so 3.27% is incredibly safe. No compliance worries on that front at all.
Okay, compliance looks great. Debt is way down. Huge green flags. But there's always risk. Where should an investor still be cautious? You mentioned the global VC funds.
The most obvious remaining vulnerability flagged in the report is foreign exchange risk, FX exposure. Even after paying down that huge lira-denominated debt to Yıldız, Gözde still holds a significant negative net foreign currency position. Basically, they have more FX liabilities than FX assets.
How big is that position?
It's detailed as a net liability of about 923.6 million TL. And it's predominantly in US dollars. This seems linked to the remaining portion of that related party debt.
Right. And what does a 923 million lira FX liability mean for you, the investor? How does that risk actually play out?
Well, the report models it. They state that if the US dollar were to appreciate by just 10% against the Turkish lira, Gözde would have to recognize an additional non-cash loss of roughly 92.35 million TL on its income statement due to the revaluation of that liability.
So while they've slashed the amount of debt, the remaining portion being in USD still leaves the reported earnings vulnerable to currency swings.
Exactly. The lira weakening significantly would still hurt their bottom line, even if it's a non-cash accounting impact initially. It's a material risk to watch.
Okay, that's a lot to digest. So if we were to boil this whole 9M 2025 report down for the listener, what are the two absolute key takeaways?
I'd say first, this period was all about balance sheet repair and de-risking. Gözde used internal cash collection, essentially, to massively pay down related party debt. This makes the company fundamentally more stable and less leveraged, dropping that key debt-to-equity ratio into low single digits. Huge plus.
And second
takeaway, don't be fooled by the headline revenue collapse. That was due to the lack of a giant asset sale like in 2024. The underlying story is that the net loss actually narrowed substantially. Why? Because the paper losses from their investments decreasing in value were much less severe than last year. So more stability and portfolio valuation impact, alongside active portfolio management and that global diversification push.
So the company looks financially stronger, more independent from its main shareholder in terms of debt, even if the market volatility still impacts reported earnings.
That's a good summary. They've leveraged the ecosystem to clean house, financially speaking.
Which leads us nicely to our final thought, something for you to mull over. Given that Gözde is actively considering selling or partnering on Azmuzabat, a major holding, how will they handle the potential influx of cash from such an exit? Specifically, how do they deploy that cash into new venture capital investments quickly enough to maintain that incredibly high 97% GSYO asset ratio they currently have? Selling a big asset creates a potential compliance gap they need to fill.
That's the strategic challenge, isn't it? They need to find sizable new VC deals relatively fast if they sell as Musabat. Otherwise, their asset mix might fall out of line with the strict GSYO requirements. It's a high-quality problem, perhaps, but a structural one to watch.
Definitely something to keep an eye on in future reports. Well, that's all the time we have for this deep dive. Thank you so much for joining us. Please remember to save this analysis if you found it useful. Drop a comment with your thoughts and share it with anyone else you think needs this kind of in-depth look at GSYOs. We'll catch you on the next one.